Okay, so the CARES Act is something that, of course, was just enabled by SBA and the government and all those fun people. The parts we're going to cover specifically, because it's over 800 pages, not that I've read the entire 800 pages, but the parts that we're going to cover specifically are lending, the tax implications, and unemployment. This is definitely geared more towards businesses. We'll cover briefly some of the individual stuff, but this particular webinar is more towards businesses because that's where most of the questions are coming, especially today, which you'll find out. So the first thing that we're going to talk about is our website. So our website is up and running. You've, of course, gotten tons of updates about this from me, I'm sure, but there's a link to our website here. It's taxminimizers.com, front page, and also this resources has the COVID-19 updates. On there is a different section and chronological list of things that have kind of been happening. So the more that's come out, the more we've updated there. Of course, this is still a work in process. As you can imagine, with any government regulations that come out, it takes some time for everything to come together. So we post it on our website as clear as we know it, and there's lots of links and resources there. So if you want some information about it or to keep updated on it, be sure and check our website on that. The first part we're going to talk about is the lending portion. So SBA has come out with a couple of programs to support the CARES Act, and the first and most popular, and the one that starts today that's generating a lot of questions, is just where we're going to start. So Paycheck Protection Program is also known as PPP. The Paycheck Protection Program is one that it allows for an SBA loan to pay for payroll so you don't have to lay people off and can be forgiven. The second, and we'll go through more details there, the second program is the Economic Injury Disaster Loan. It's abbreviated the EIDL. And that one has an individual side to it, a homeowner side to it, but it also has the business side. And this is a disaster loan that SBA usually has, and now it's just been kind of modified for this CARES Act and coronavirus issue. The disaster loan has a small grant piece to it, and then the rest is a loan. So going back to the PPP, that is a SBA loan that is a forgivable loan. So that's if you have under 500 employees per location, and franchises qualify. So any franchise that has under 500 employees per location can apply for this PPP loan. It's SBA funded. It also is eligible for any 1099 independent contractors and self-employed. So you don't have to necessarily be an entity, but it is one that happens at your bank. So the banks have come in to set up these PPP loans. You would go to your bank. Many banks have said if you don't already have a relationship with us, we're not doing them new. So you want to go to your existing bank that you have a relationship with. And it's any bank who's approved to provide 7A loans. I think if you call your bank, they'll tell you if they do it or not. Then the amount of the loan is the average monthly payroll that you've had in the last 12 months, which there's some clarity coming about that, but that's the general statement being made, at 2.5 times. So whatever your average monthly amount is in payroll times 2.5 is the amount of the loan up to $100,000. Its payback is 2 years at 0.5%, so 0.5 or 50 basis points, 0.5%, however you want to classify it. But the payment itself in repayment is deferred for 6 months. So you're probably saying, well, this is the forgiveness loan, right? So they put that in there so that if you are not using it the way they think you should use it, then it's a repayment. And so those are the terms for the repayment. Then the application for it opens up today. So that's kind of been this big hurry. And if you use that loan over the next 8 weeks for payroll, then it can be forgiven. So you have to use it actually for payroll. You keep your payroll within 25%. There's this like 25% cushion you can use, and you keep your payroll within 25%, then that means you've used it primarily for payroll. Then that portion is forgiven. You don't have to pay it back. Also, if you use it for rent or mortgage interest or utilities, then that portion is forgiven as well over that 8-week period. So it's feasible then that you could have it all forgiven and you wouldn't have any repayment. Anything that's not used for that would end up having repayment at that 2.5%. So yes, we'll definitely look at putting some numbers to it. So if let's say that, rough math, right? Let's say that our payroll is $10,000 a month average over the past 12 months. Then they're going to give you $10,000 at 2.5 times. They're going to give you $25,000 because it's less than 100. So $25,000 is what you would get for the loan. And then let's say that you end up losing somebody, or your payroll now isn't as high as before. As long as it's within that 75% number, then you can still use it for payroll. So again, they give you that 25% cushion so that you don't have to use it every dollar for dollar. So let's say now your payroll is, I don't know, $9,000 a month. So $9,000 at the 8 weeks is roughly 2 months, right? Means you're going to spend, of the $25,000, you're going to spend 18. You better spend 7,000 more on mortgage, interest, rent, or utilities, or that difference is going to have to be repaid over a 2-year period at 0.5%. One question that came in is, what if your payroll goes up? So my first caveat to this whole thing is, not all of the rules have come out yet. So if you go down this road, you definitely want to look at all of your loan documents and make sure that the terms are in there and you're super clear at what you're doing before you sign them all. But they have not said if your payroll goes up. What everybody is speculating is that that's fine. If your payroll goes up, you use it all towards payroll, great. They want you to employ more people and keep them off unemployment. So your payroll can go up. They've also not clarified differently somehow that owners don't count. So as of right now, everyone's assuming owners count in all of these scenarios. They also have not indicated that it's person by person. It's just overall payroll that they're looking at. So, Teresa and I are kind of guessing that some of those things will be ironed out here soon. And likely that by the time you have done the mortgage process or the loan process, not mortgage, loan process with SBA, more of those things will be known. Another question that came in is the amount of the mortgage. So the mortgage interest or rent, so it can be either on the business. So it's not your personal mortgage. It's whatever the business, it's a business loan, so it's whatever the business is paying in mortgage interest or rent or utilities. So these wouldn't be necessarily home costs. Okay, so that's the big one. The PPP is the Paycheck Protection Program. That's the one that a lot of people are talking about, and it opens up today. The second one is the Economic Injury Disaster Loan. So that one you apply for directly on SBA.gov. That's the little link we're showing down here if you can see the webinar. So it's SBA.gov. They have this yellow click here link, and that walks you through a 3-screen pre-qualification. And the 3-screen pre-qualification is going to say, basically, who are you, who owns your business, and what are you looking for? In that process is an immediate $10,000 economic disaster payment. And it asks your bank account to deposit that $10,000 in. They say within 3 days. I wouldn't believe it because I haven't seen it happen in 3 days yet, and I haven't heard of it happening, but maybe it has. So I definitely would not look at 3 days being golden. But the purpose is a $10,000 3-day grant. You apply for it online, they deposit it in your bank. The word on the street is that even if you don't get the longer loan, you keep the $10,000, and it's a grant at that point, not to be repaid. The clarity that hasn't exactly come out yet is if you do get it, do you have to repay the 10? I haven't heard otherwise. So it's possible that they would add that to your loan. The overall disaster loan is a fixed 30-year loan up to $2 million at 3.75%. It's made to be disaster relief for a long period of time and does not get forgiven, leaving that $10,000 separately. And it doesn't have to be paid or used on certain things. It's just used to run your business. So you can, most people are saying that you can apply for both, and they're independent programs. So one happens through the SBA, the other happens at the bank, although they're both SBA financing. So, SBA will know about both of them, obviously. But the understanding is that you can apply for both. Yes, one of the questions was, can you apply for both? For sure. And backing up 1 second, what if we already have paid the mortgage interest or it was going to come due? So it would be what the mortgage interest is for the 8-week period after the loan. How long it takes to get the loan, they haven't said yet. That's going to be something the bank can answer. And Amy has a question about agriculture. I'm going to have to get back to you on that one, Amy, but I'll make a note to do that. At this point, I haven't heard differently about agriculture, but you could be right. So the banks are definitely supposed to be opening up for these today, and I've heard that Wells Fargo and Bank of America are definitely the kind of the front runners. I've also heard that if you have a relationship with a credit union, they're tending to happen faster because they're smaller, but then there's people working from home, so I don't know how fast that would be. And then there's also one other caveat to this, and that is if your business already has an SBA 7A loan, you can use these to refinance that loan into a new one. So if you already have SBA financing, you can look at increasing what you have and rolling it into one of these. Generally, it would be the Paycheck Protection one, but again, the relief for payments, you won't have to pay for 6 months is what they're saying. So. I think the most common question we're getting is, which one should I apply for? At this point, we would encourage you to apply for both of them. Partially, the answer is going to depend on what length of time you think this is going to go on and what length of time you think you need for your business to be successful. The Paycheck Protection Program is only 8 weeks. So if you think this is going to go on, months and months, well, I should say, 6 months, then you may want to look at the disaster loan. Even though it has to be repaid, it can be used on anything, and it's a 30-year fixed loan at 3.75%. So if you think this is a short-lived thing, or you only need a few months to get by because then changes will happen in your own business, then the Paycheck Protection Program may be something that you want to look at instead because of the chance of it being forgiven. Also, the purpose of the money is the other deciding factor. So if the purpose of the money is really to keep your people going and get them employed until you have a shift in business or in 8 weeks, or something different's going to happen in the country, then maybe you only need that Paycheck Protection Program for the 8-week process, and then have it forgiven, and you're on your way. So those are going to be the primary factors, deciding factors for sure. A question that came in about the disaster loan, am I aware of any prepayment penalties? SBA, oh, let's talk about that too. SBA generally has prepayment penalties. So yeah, good question. Generally it has prepayment penalties. I have not heard of anything differently. However, the Paycheck Protection Program only being a 2-year payback would mean that with a 6-month deferral of payment would mean that there likely is not going to be a huge prepayment penalty, even if there is one. So I haven't heard specifically on that. Question about Wells Fargo. Actually, I heard Wells Fargo was one of the front runners on this, so that surprises me that they're not taking applications yet. You might check today because maybe they're anticipating, maybe they weren't actually saying it until today, but that Paycheck Protection Program, I've heard that Wells Fargo is one of the front runners. And yes, the Paycheck Protection Program has a payback at 0.5%, where the disaster loan has it at 3.75. So those are the differences in the interest rates. Paycheck Protection is 2 years, and only on the money that's not used that can't be forgiven. And the disaster loan, again, is 3.75 over 30 years. Part we didn't cover is fees. So the economic disaster loan has, again, you're applying for it straight on SBA.gov. There are lots of resources and people, private lending people that will help you apply for that if you want. For that, they will charge a fee. They can't charge more than $2,500. The theory is that if you don't need anybody to help you with that disaster loan and you can do it all yourself, then there won't be a huge fee, although it is historically that SBA charges some kind of fee. I don't know exactly what that is on that loan. The Paycheck Protection Program is generally 2 to 3.5%, depending on the size of the loan. And then your bank may charge a fee. But since this is all bank front-run, they're going to be the ones that are able to tell you what those fees are on the Paycheck Protection Program. I would definitely check with them if that's something you're considering, to know what those are. Okay, so if you have other questions about the loan stuff, definitely throw them in the comments and we'll touch base about them. So the tax relief is the second portion that we're going to talk about. The tax relief is available in 4 main ways. There's, again, with an 800-page plan, there's lots of little caveats, so there's definitely more than 4, but these are the 4 primary ones. The first one is payroll tax credit. So a payroll tax credit is available if you end up having people who are self-quarantined, taking care of somebody who is has the coronavirus, if they themselves have the coronavirus. And I think that, self-quarantine is pretty broad based on what's happening in today's world. So I think that that can be used quite a bit, but the payroll tax credit is available for those, which we'll talk about. The payroll tax payment delay we're going to talk about as well, and that's your actual payroll taxes. There has been a filing and payment deadline extended, and then there's the stimulus check. So the payroll tax credit is one that you can pay your staff. And again, they haven't negated owners on this one either, but if somebody has to be home or self-quarantined, home sick with the virus, taking care of somebody that's sick with the virus, or self-quarantined. And so self-quarantine is super broad. That one is one that you can pay them up to $511 a day. And if you pay them up to $511 a day, you can do it for 10 days. And then you receive a credit against your payroll taxes. So let's say that you pay someone $200 a day and you pay them 10 days and they're home self-quarantined, not working, or working or not or whatever, just self-quarantined. Then you're paying them, and you would pay them $2,000, kind of like sick leave, right? So you're going to pay them $2,000 for 10 days. And then you're on your payroll tax reports, you're going to report a credit of $2,000. And it's going to come off of your payroll taxes that way. So it's basically allowing you to take up to $5,110, depending on what you pay people, but up to that, and call it sick leave and receive a credit for it. And that's going to be the 10 days. That goes from March 12th, I believe the date was, to the end of the year. So it can happen anytime that happens. There is one caveat that is also available in that program, and that is if you have somebody that has to stay home to take care of a child who is not in school anymore, then you can use 2/3 of that amount. So whatever their payroll is, what would that be? 511 at 2/3 is going to be up to 337, but it's 2/3 of their money. So if you pay them $100 a day, then it's going to be 66 of that. So it's only 2/3 of whatever money you're paying them, up to 337 a day for 10 days. Then that can be used as well. So it's 2/3 if they're just home because their kid's home. Or it could be grandkid, doesn't have to be kid, but a child in their house or a grandchild that they have to help and take care of. Then you can receive a payroll credit for that. Now, in all the items that I've read and talked about and gone through with everybody and all the experts, there is a possibility that it's going to come out that you can't use the payroll tax credit and the PPP program at the same time, or both at all. So if that happens, your payroll tax credit, because I said you don't have to use it all the way until the end of the year, right? It is for wages paid between March 12th until the end of the year. It's possible that you could apply for the PPP program and know that scenario before you use it with your second quarter payroll reports. And if it comes out that you can only use one or the other, you would know that before you have to file them in July 31st. So your second quarter payroll reports are due July 31st. That's where you would take that credit. But you would know the PPP loan and the rules would be clarified by then before you actually file those reports. So just fair warning, there may be something that comes out that says you can't use both. Although I've only heard that from one person, so. Oh, and it is March 12th. Okay, so the second part is, sorry, a question came in. So the question was, do you have to have an employee home because they're sick, or do remote workers at home count? So my theory is that they're home remotely working because they're self-quarantined. And if they're self-quarantined, then yes, they would qualify. If they're just home working because they're not self-quarantined, which is self-quarantined, but but if they're not self-quarantined, then no. So they have to be self-quarantined, taking care of somebody that's sick with the virus, have the virus themselves, or for 2/3 be taking care of a child who's out of school because of the virus. Good questions. Okay, payroll tax payment delay. A rule came out that says you can defer the employer side, so you can't keep the employee's money, but you can defer the employer's side of the payroll taxes and not pay those now until the end of the year, until 2021 and 2022. So what they're going to do is they're going to say whatever the employer cost is, so that Social Security and Medicare the employer pays, the unemployment the employer pays, those can be deferred and not paid during this year, and you'll pay half in 2021 and half in 2022. So it's definitely deferred, not forgiven, but you can delay those if you would like. and it's only the employer portion. You still have to pay the employee portion. It's also only federal at this point. Oregon has not said that you can do this. So federal tax payment delays of the employer portion now until the end of the year and defer those have to be paid in 2021 and have to be paid in 2022. That one's pretty simple. There is filing and payment deadlines have been extended, so I'm sure you've seen this all over the place from us and everywhere else. But the filing and payment deadlines have been extended to July 15th. So anything that was, any tax return that was due April 15th is now due July 15th. You don't need to file an extension for it. However, the 2020 quarterly payments for federal, only the first payment is deferred. So your quarter one estimated tax payment is due July 15th. Your quarter two is still due June 15th. So you're gonna pay quarter two before quarter one. Oregon has said that's not true with 2020 estimates. Oregon, you still have to pay timely for 2020 estimated taxes. The filing of the paperwork and payments for 2019 tax returns are not due until July 15th. Any tax return due on 4/15. So nonprofits were due 5/15. Those nonprofits are still due 5/15 at this point. They've talked about extending those too, but there is reasons to file timely. 70% of Americans actually get a refund. So you may want to file because of that. If you have somebody who has income in your family, older people possibly who have income that don't normally have to file, they may want to file as well. So the reason for that is number 4. So the stimulus check, there's a stimulus check coming for individuals. It's based on income. So depending on, you know, joint or married, and again, this is a business webinar, so I'm not going to cover it too much, but if you want more info, it's definitely on our website. The stimulus check is $1,200 a person, $500 for each dependent that you have who is 17 or under. Sorry, under 17. I believe it's 17 or under. And it's based on your 2019 tax return. If you have not filed 19, it's based on 18. And it would be directly deposited into your bank as long as you had direct deposit noted on on 19's tax return, or 18 if you haven't filed 19. So 19 will supersede 18 unless you haven't filed. Then they'll go to 18. If you have somebody in your family who hasn't filed at all, solely because they're on Social Security, they'll still get it. If you have somebody that hasn't filed at all but don't get Social Security, they won't get it unless they file a 19 tax return. All of this is actually a result of a payment on your 2020 tax return. So even though they're basing all this on 19 or 18, if you haven't filed 19, then it's going to become a reconciliation on your 2020 tax return. So it's feasible that, you know, if you didn't get it because 19 your income was super high and 20 your income's going to be less, especially now with this stuff, you'll get it on your 2020 tax return. Or vice versa, if you got it in 19 because 19 was super low and 2020 is higher, you're going to owe it back. So it's a reconciliation that will happen on the 2020 tax return. And if you were eligible to get it and didn't get it, it'll happen on 2020. If you usually owe, like me, and they don't have a bank account on file, then they are coming out with a portal that you can add bank information on, but that's not out yet. And the timing of the payments, not real sure yet. Depends who you ask. I think that everybody's really overwhelmed right now. So it's supposed to be, like somebody said, within a few weeks, but I don't know that I'd hang my hat on that either. I think the most recent notice actually said that it was supposed to be April 13th, but then, yes, thank you, somebody posted that somebody else said 2 weeks. So I don't know. Okay, and then stimulus check. Oh, other tax relief stuff. So there's all kinds of rules, and on our website has a list of other scenarios that can happen as well on this CARES Act. So if you go to the website, look at the CARES Act, there's things on there about NOL carrybacks. Required minimum distributions. If you're in an RMD, you don't have to take it. In 2020. If you already took it, it's feasible you could send it back within 60 days. There's also a cash contribution, above the line contribution that's happening for $300. So long list of other things that could come into play, and those are outlined on our website. Since they're more on the individual side, we'll stop there with those. Okay, so unemployment, that's the other popular question. Unemployment, the benefit is increased by $600 a week. And so whatever benefit Oregon or Washington or California, I know we have people all over the place, whatever benefit you're getting, or not you, but your staff or whoever, it'll automatically be increased by $600 a week. And the extension is an additional 13 weeks on top of whatever number of weeks you would normally get with the state that you're in. So if your state says, hey, we'll give you, 6 weeks of unemployment, that's extended by 13, you would get 19 weeks, whatever it is. It's also expanded to include independent contractors and self-employed people. So normally they are not able to get unemployment. I have been checking with Oregon over and over, and they have all of 10 to 20 people working in that office, it feels like, and have not gotten straight information on that. But I would definitely, if that is a concern or question, I would definitely look at the Oregon Employment Department website, because they're updating that every day with more information on who qualifies. And if all else fails, I would just apply. So if in doubt, they're saying, if you're not sure, just apply. And, that's really lightening their load, I'm sure. So the week waiting period that normally happens has been waived. So whenever somebody applies for unemployment, there's normally a 1-week waiting period, and that has been waived. So now there's not a week. From the business side of things, there is a Workshare Oregon program that may be of interest. So in addition to everything else that's happening, Workshare Oregon is a program that has been in Oregon for a long period of time and available, just not a lot of people know about it. The purpose is that you can reduce your employees' payroll 20 to 40%, can't be less than 20, can't be more than 40. You can reduce it 20 to 40% and get approval, it has to be pre-approved, with this Workshare program for your business. And Oregon will give them a partial benefit. So normally unemployment is, you get it or you don't. But Workshare Oregon says, hey, we don't want as many people laid off. If there's a way for you to work people half time, then 20 to 40% of the time, or what is that, 80 to 60% of the time, then you can come in and say, okay, well, I'm going to reduce your wage and hours by 40%. And then whatever benefit you would get on unemployment, they're going to give you 20 to 40% of that number to help supplement. So you're working people less hours, you're paying them what you would normally pay them, and then unemployment is paying them a portion between the 20 to 40%. It's designed to try and save Oregon jobs, basically. So it is a pre-qualification or a pre-approval process. You go through, it's a 2-page questionnaire, I believe, and then you apply. Responses are not super fast that I've found. I think that I've had a few people apply within the last week and a half, and I don't know that they've heard back yet, not that I'm aware of anyway. So that is a program that's available through unemployment. Holly, can you ask your question again? I'm not sure if I answered that question or not. Okay, so let's go through some of the questions here that I may have missed. That's basically the three elements. So the lending portion, again, you're going to go to your bank for that PPP loan. So I'm just going to run through these questions, make sure I answered them. If I didn't get to yours, feel free to post it again. And okay, thank you. So somebody said Wells Fargo is taking interested employers and scheduling appointments, probably because of social distancing, right? So so that may be a resource, but sounds like it may be a slower resource. Yeah, there are some lists. So somebody said that there's lists of payments and stimulus stuff. So again, we are still going to continue posting on our website the information as we know it to be in those sections that we have outlined. And we will definitely be looking at, posting any updates there that we know about, especially on the stimulus check part, because I mean, it'd be great if it started the 13th and everyone got it then, right? So question is, do I include all my independent contractors even if they're applying as well? Tammy, I'm not sure if that is about the Workshare Oregon process, but the Workshare Oregon is only for employees. If it's about unemployment benefits, the independent contractor themselves would be the ones paying. And if it's about the loans, the PPP loan, that is only payroll. Yes. Okay. So the PPP loan is only people on payroll. You would not include independent contractors on that. Okay. So the question is on Workshare Oregon, the new rules of unemployment, would they apply to Workshare on the increased portion? So my thinking is, and I don't know all the unemployment rules necessarily as they relate to getting the CARES Act in there. My thinking is that they would get the increased amount. So if you have a 20 to 40% share with unemployment and now unemployment is higher, they should get the 20 to 40% of the higher amount. That's my thinking. Yeah, so the question is, would you suggest we apply for the PPP loan and take advantage of the 10-day quarantine pay sick leave? So there is one or two scenarios that I've heard that say that you cannot use both, that you can't use that payroll tax credit of the 10-day quarantine sick leave and the PPP loan. I don't know how accurate that is. It has not come out from a government source at this point that I've read. So I think that given you don't have to file your quarterly reports for second quarter until July 31st, and if you apply for that PPP loan now, you would have that answer by the time you have to use that payroll tax credit. So my suggestion is if you have somebody self-quarantined for 10 days that's working remotely from home, you're still getting the work out of them and they are still qualifying for that self-quarantine, but it is, technically supposed to be sick leave, so there's kind of a little confusion there. So I guess, Holly, my answer to your question is, would I suggest you apply for the PPP loan and take advantage of the sick leave? I think there's a scenario that you could do both, although that's not extremely clear in the moment. So I would definitely apply for the PPP. If you are thinking that your business will have this 10-day quarantine for quite a while, self-quarantine for quite a while, then you have time to determine that 10-day period because it goes from March 12th until the end of the year. So somewhere in there, you could have a 10-day sick leave quarantine. Unless this whole thing ends tomorrow, then you're missing out. But so I think that you could feasibly work it where you have both. And again, I haven't heard from a reliable government source that you can't use both. So I say that with caution. Okay, well, I'm not seeing questions from anybody else. Again, if I missed your question, definitely shoot me an email or call into us and we'll work it out. Our website there is taxminimizers.com, and then you're looking for the COVID-19 link on the front that'll take you to the page where we give all the updates. And I think you're all good. So stay healthy and happy, and let us know if you need us. Have a good day.